I don't want to be a Debbie Downer and tell you that inflation is higher. I don't want to tell you that. But guess what? I do want to tell you that we have some fantastic opportunities, some of the best opportunities that you've seen in a decade that is coming later this year and next year. This is to our Canadian friends. I'm wearing my Canadian garb today. So inflation is coming hot again. Now, you guys must be getting tired of hearing this from me over and over and over again for an entire year, that inflation keeps coming back. I am shocked at how resilient the economy is right now. It's quite impressive, actually. So StatsCan came out with their information today, and they're saying that inflation came in at 4.4%, much hotter than normal. So we got to find out what is actually happening in the market. What are people saying about it? And how can you protect yourselves a little bit from this craziness that is actually going on? All right, so let's jump straight in to our first story of the day. Wanted to show you what people are saying about this inflation business that is happening. So if we take a look at it, risk of rate hike rise, what the economists are saying about this. So we cannot be surprised by what the government is saying right now. The government has always said that we will make sure we get 2% inflation. This is exactly what the US is saying as well. 2% inflation, we will not stop until we get there. Jerome Powell says we will not stop until it is done. So right now, the Bank of Decision is coming up with this decision in just a couple weeks. Now, we have an accelerating of inflation to 4.4%. They were expecting 4.1%. This is a big miss. This is the first time that headline consumer price index, the CPI, has picked up steam since June 2022. It has been in a constant state of decline ever since, so this is a big problem. They are saying that higher rents and the rise of costs of mortgages have soared more than 28% last year. Now, this is the average, you guys, because on a personal level, it's closer to 50%. Higher gasoline prices at 6.3% is one, and they said the uptick in inflation better than expected April jobs report. These are really, really bad news. And then in addition to a rebounding housing market, a boiling hot housing market this spring, it doesn't give them much room to give that excuse, well, we can't raise rates, we're going to have to pause again. So we know that the Bank of Canada has paused 2 times in a row, whereas the United States are continuing to raise their interest rate. So that is pushing their dollar up higher in value. And because Canada is not raising, it's pushing our dollar value down. Why does that matter to us? And why would you care? Well, everything that Canada imports, which is a lot, $750 billion a year, is all imported in US dollars. So if our dollar goes down compared to the US dollar, we got to pay more stuff. We got to pay more money for the same stuff. And that means, my friends, more inflation. So that's a problem for us. So this is what they were saying. Also, if we move over, inflation is ticking up in Canada. These were food prices. It says grocery store prices up 9.1% in April, 8.3% in April. So this is, it depends if you were in a total amount of food, in a restaurant type of food, or just a grocery store food. So 9.1%, but some of the noted ones, notice bakery products at 14.3%. We also noticed that pasta products are up 17.7. These were the big ones. You guys know from following me for a while, we've been talking about grain, and the majority of grain comes out of Russia and Ukraine. And so as those, obviously there's an altercation going on as they're pulling those grain stocks, they're fighting for their countries. They don't have time to plant crops. And so that reduction in the grain supply in the world is really hitting the world markets, and we're seeing prices getting pushed up way past double digits. It's almost 20% for pasta products, which is absolutely crazy. How else is the market reacting these days? Let's jump over into this right here, that rent and mortgage interests are driving inflation higher as well. So if we're looking at rent as well, they are saying right now that mortgage costs are up 28% in April. 28%. And they also said that inflation is 6.1% year over year. So 2 statements about this is because, number one, this is the average that people are paying more. The real price is much, much higher. It's closer to 50% more. And so this is the average. So just because 50% didn't renew their mortgages, it's making this look a lot better than it is. Also, inflation being only 6.1% when it comes to rent. Come on, guys. You guys know that, especially in the big areas, which is more than 50% of Canada, Toronto and Vancouver, the mortgage rates are up higher and the rents are up much higher than 6%. We're seeing people getting 6, 8, 10% rent increases. We just had one recently that was a 15% rent increase. So like, I don't know where they come up with these numbers, to be honest with you. I think it's some kind of Harry Potter weird dark magic that they come up with this stuff, to be honest with you. All right, but how are people actually dealing with this? As people are dealing with this, homeowners now are opting for short-term fixed mortgage rates in hopes that the rates will fall. And this is a strategy that I've been talking about to people lately is, right now we are facing a very, very weird time where these rates for variable is much more expensive. And this doesn't make any sense whatsoever. Okay, so for all of time, you always have this one way of looking at things. Okay, one way is that this fixed rate gives you like a security blanket. So when you have a variable rate that is moving down here, you are getting a better rate because you're taking more risk. You never know what is going to happen in the future. Now, historically, in the past 30 years, we've been in a declining interest rate environment. So variable has always worked. Nobody really has experienced what it's like to have a variable rate mortgage through a time like we are right now. And so normally a fixed rate, which gives you that extra security blanket, floats above the variable rate all the time. Okay, so you have to pay up a little bit, but you never know where it is going to be. So a fixed rate is flat, I know. But if you look at the daily charts, fixed rates are always an amount higher than the variable. Okay, so right now we're having a flip, the great flippening. Can't believe it. So now we have fixed rates below a variable rate. And everyone is scratching their head going, how on earth can this possibly happen? I don't understand this. How can this happen? So let me tell you this. You have to pay a premium today for a variable rate. And I'm talking 1%, 1.5% over. Shocking. So you have to tell me, why would a bank sell you a locked in fixed interest rate at near cost? Why would they do that? Unless they knew something that we didn't know and are willing not to make very much money on the first one, on the first year, and then make a ton of money off you on the other years. So if we go look at where these variable rates come from, it all stems from the bond rates. And we are seeing forward guidance on that, where they're actually giving guidance. The smart money in the bond market is looking forward, saying, where are we today? And they are betting that 12 and 18 months away from now, we are going to have a 2% reduction in prices. This is coming. The banks know this. So why are they tempting you and teasing you to get into that fixed rate, right? So if I was going to do a fixed rate, I would never be doing a 5-year right now, even though that's what they're offering. If I was going to do a fixed rate now, I probably would go low, but I'm not a mortgage broker. I'm a real estate investor. I'm a real estate agent, and we work in Toronto on a lot of different properties. This is where we work. You could always reach me here if you wanted to, but we specialize in selling properties in Toronto. So we're dealing with this all the time, is these rates. So, get somebody that you trust, get somebody that you know, because this interest and inflation is not going anywhere. It's not going anywhere for a while. So there's going to be some real fun, I'm being sarcastic when I say that, changes that are going to be happening in the near future when it's coming to this. So let's take a look at Statistics Canada. Statistics Canada reaches out right now, and they have some information that is popping up. And this is one thing that I want you to pay attention to. Everybody on the planet looks at the 4.4%. That's all they care about. This is all they hear on the news. Inflation is 4.4, blah, 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 and they move on. But notice that in the very, very, very first page, they're saying gasoline prices continue to fall year over year. And I want you to remember that this is zero control of the Canadian government, zero. And they kind of allude to it in that way. They said gasoline prices are down. And this is following the announcement from OPEC, the oil producing countries, to reduce oil, push higher prices. And they're also saying, we're increasing the carbon levies on people. So they know that the extra carbon levies are raising prices, but remember, this is not in their control. They have zero control over fuel. But they do point out in the next page, right, that mortgage interest is up 28%, which is incorrect. Let me show you that. If we take a look at a calculator here, notice here I have loan 1 up here, loan 2. $1 million, $1 million. Most people in Canada, they have a 25-year amortization. Last year, 2%. Right now, 6%. What is the difference in mortgage? $4,208, $6,443. $2,200 difference. Let me repeat that. from 4 grand to 6 grand. That's a 50% increase, my friends. It's just over. And where does that money come down to? If you look up top here on $1 million loan, on the first loan, over the term of that loan, it's $271,000 in interest. But on the second loan at 6%, you will now pay $932,000 in interest. So when you buy a home for $1 million, you're going to have to spend another $1 million in interest. You got to pay attention to that stuff. So when Statistics Canada is telling you, well, mortgage increase costs are only 28%, that is because it's the average, you guys. This is not per person. This is across everybody. And not everybody has renewed yet. So when those renewals keep coming, it's going to hurt a lot of people moving on. When they want to talk about 6.1% rental demand, higher rental demand, that is a joke because we're seeing way more than 6%, way more. So this is what I encourage you guys to take a look at this, because I think that we're in for some very interesting times coming up. I try to look at both sides of the picture. I don't want to be a Debbie Downer and tell you that inflation is higher. I don't want to tell you that. But guess what I do want to tell you? That we have some fantastic opportunities, some of the best opportunities that you've seen in a decade that is coming later this year and next year. We have such an enormous amount of people that are coming up for renewal, that are getting bit by the lag effect. Commercial real estate is going to have the most trouble out of any market. And as we see all of these banks taking these losses and so forth, you're going to have an opportunity to buy houses, to buy all this other stuff at great deals, only if you are prepared for this. Remember 2009, 2010, when we were back in those days, people could own a house 100% in cash and no loans. Banks were not going to lend you a mortgage. Nope. Even if you were willing to put 50% down. Nope. We're not giving up mortgages. People forget that. And so if you are prepared in advance for the situation where it's going to favor people who have prepared their finances, you still have time to prepare yourself to be in a fantastic situation as this gets through the system. So they describe it. I saw Mr. Wonderful, Kevin O'Leary, who I want for Supreme President of Canada. What do you think about that? It's just an idea I was throwing out there, but he was describing this long snake, and a pig is in the snake and it's just digesting through the snake. Kind of gross, right? But he was like, you just have to let it work its way out. The same thing is with commercial loans. In Canada, $2 trillion of commercial real estate. In the States, $20 trillion. And 10% of that is coming up due for renewal all within the next 18 months. So it's going to be a very interesting way that all these companies and houses readjust to a much higher interest mortgage rate. And so do you think that this is going to stay long term? I'm wondering what you guys think. I'd love to know in your comments, but I don't think it's going to last 18 months. I can't see the write-offs that are happening in the United States. We've had 4 banks that have collapsed so far, but there's another like 700 vulnerable banks. So how will this play out? You remember, it's like that snowball that's going down the hill. It's picking up steam, getting bigger and bigger. And I don't know where it's going to show out, but my money right now is sitting on commercial real estate. Interesting to know what you guys have any comments about this. I'd love to know. Please leave it below. Please subscribe to the channel. It helps us out a lot, and I'll see you soon.